Is silver finally entering its moonshot phase? Peter Schiff says the breakout we've waited decades for isn't just coming, it's already here. He's now forecasting that the old $50 ceiling is a thing of the past, and a new, much higher floor is being established. If you've been holding on to silver or mining stocks, the game just changed. Today we're breaking down Schiff's latest 2026 forecast and why the smart money is pivoting to the miners. Welcome back to Peak Life Wealth. For the hardworking savers among us, the goal has always been simple: protect your purchasing power from the silent tax of inflation. Peter Schiff has been a vocal proponent of sound money for years, but his latest analysis takes a massive leap forward. We aren't just looking at a steady climb anymore. According to Schiff, silver is decisively leading the precious metals bull market, outperforming even gold in its magnitude. In this video, we're diving into the specific price targets Schiff is eyeing for 2026, the byproduct effect that is making silver miners an absolute steal, and why he believes the downside risk for precious metals has virtually evaporated. If you're looking for a roadmap to navigate this macro shift, you're in the right place. Let's start with the technical psychological barrier, $50. For years, $50 was the triple top, the level silver just couldn't crack and hold. Schiff recently noted that once silver broke above $50, it became a moonshot. But here's the kicker. Analysts usually expect a breakout to retest the old resistance as support. Schiff says we're past that. He believes support is now sitting at $70. He's on record saying, "I don't think we're going down to 50 at all." Think about that. If 70 is the new floor, the upside potential is massive. This isn't just a spike, it's a fundamental shift in the metal's valuation. As of early 2026, silver is already up over 12.5%, signaling that the precious metals bull market is not only continuing but accelerating. Before we move into the mining stocks, I want to hear from you. Do you think $70 is a realistic floor for silver, or are we due for a correction? Drop a 70 in the comments if you're with Schiff, or tell me your target. Visual comparison chart of silver versus GDX, Gold Miners ETF, and GDXJ, Junior Miners ETF. Now, if you want to see where the real wealth is being generated, you have to look at the miners. Schiff highlights a massive trend. The stocks are finally outperforming the metal itself. Last year, the GDX, the large cap miners, finished up 153%. The GDXJ, which tracks the juniors, was up a staggering 166%. But here's the contrarian take that Schiff is hammering home. Even with those triple-digit gains, these stocks are still very cheap. The investing public still doesn't appreciate the leverage here. Most people are still afraid of the volatility, but for the hard-working saver, this is the opportunity to grab undervalued assets before the general public FOMOs in. Why are the miners' earnings about to explode? It's a two-pronged attack on costs. First, energy. Oil prices have been hovering below $60 a barrel. As Schiff points out, energy is the single most significant cost in mining. When the price of the metal goes up and the cost to dig it out goes down, profit margins don't just grow, they gap up. Second, there's the silver byproduct effect. Most gold miners actually mine a significant amount of silver as a secondary metal. Schiff explains that the revenue they get from this silver byproduct is now so high that it's effectively offsetting the costs of mining the gold. In many cases, the silver is paying for the operation, making the gold almost free to extract in terms of net cost. This is why Schiff is so bullish on the sector. The fundamentals are the strongest they've been in our lifetime. Of course, we have to talk about risk. Schiff is famously cautious, but even he sees limited downside here. He stated that he doesn't see gold going below $4,300. If the floor for gold is that high, the floor for silver and the miners is equally protected. While silver will always have more volatility, which Schiff says makes sense given the magnitude of the breakout, the macro environment of inflation and debt makes hard assets the only logical exit ramp. The bottom line is this: Peter Schiff's forecast isn't just about a price number. It's about a change in the global monetary regime. Silver is leading the charge, the miners are finally waking up, and the cost of production is dropping. If you value sound money and want to stay ahead of the curve as we move through 2026, make sure you're subscribed to Peak Life Wealth. We're here to help you navigate these markets with a focus on long-term stability and real wealth. If you found this breakdown helpful, hit that like button. It really helps the algorithm show this to other savers. And if you want to see our deep dive into the yen carry collapse and how it affects silver, click the video on your screen right now. Thanks for watching, and I'll see you in the next one.